Yes, Daniel, do you remember whatever we learned during last lesson?
Last lesson.
Yes, what we learned?
The financial accounting and
Okay,
yeah,
and what else?
users of the
Yes, we learn about the sole trader partnership.
yes, yes,
We learn about companies. We learn about different stakeholder, how they can use the financial information to make decisions. We discuss different sort of financial statement we prepare. We discuss difference between financial management and financial accounting, and we discuss about some legislation regulations as well. So that's all about understanding the concept and the conventions about the accounting, financial accounting and financial management, where we discuss financial accounting is external and management accounting, financial accounting external and management accounting is internal. Financial account have a time scale. After every 12 month financial statement we produce or prepare, but the management accounting don't have any particular time scale. You can produce accounts whenever you want. So management accounting normally internally used, is not available for external stakeholders. So all these sort of things we discuss, we discuss sole trader, partnership and limited company, and we discuss about advantages, disadvantages, liabilities, limitations, all we discussed during the last lesson. So today we are moving forward. So today our LO2, which is learning outcome 2, which is quite big learning outcome, which we'll try to our best to be meet as much we can discuss today. Otherwise we'll go through few elements during next lesson as well, and then we'll move to the next. Like next lesson is all about the calculating financial ratios. So today lesson will be focused on be able to prepare the financial statement, sole trader, partnership, limited company from ledger accounts and incomplete records. So which will go through prepare the book of entries, book of original entries, will go through the trial balance, prepare the trial balance information and final account, and construct the final statement including the cash flow statement, and make adjustment for the bookkeeping and final accounts. So that's all will be focused during all this lesson. Any question?
what fair balance means? I didn't.
Sorry, which one?
Uh, Priya. Yes.
Trial
Priya.
balance. Prepare. Sorry, I'm not get.
Ah, okay. I understand. This
Oh, you
is
understand?
yeah.
Okay. Okay. So trial balance. Prepare. We look, how to be in debit and credit rule. Like during our level 4, we discuss as well trial balance with all the ledgers. Okay. So which will go through. Incomplete mean not complete, and construct mean is sort of reduce it to the reports. Adjustment is mean the adjustment entries end of the year, which will go through. It's called accounting adjustments. Okay. So today lesson is all about, we'll go through introduction to trial balance, explanation of the financial statement, and I wish we all learn and prepare our financial statement. I'll send you the handouts and they will as well so we can go through. Okay. What is about the trial balance? We ever heard about what is meant by trial balance? Daniel, you heard about? Sorry?
I don't know.
Oh, you don't. Okay, no problem. Trial balance is the balance of all ledger account. Ledger account mean like, the sale book, sale day book, how many goods we sold, the balance will be transferred to the trial balance. Purchase day book is a purchase ledger account balance will move to the trial balance, and all the ledger balances move to the trial balance, and the trial balance have a two side, one is a debit and one is a credit, and both debit and credit sides should be equal under the trial balance. So I'll show you some trial balance and that will help us. Okay, so we learn about double entry bookkeeping is called debt click. So shall show you as well now. I'm wrong folders. Yes, I need to pick the right folder. Okay. Okay. Today is a lesson 2, which I'll send you this all this stuff later on, and we'll go through the trial balances. Okay. So Daniel, I'll send you this handouts, huh? So we can quote examples from this handout in our assignment as well. Okay. Okay. This is all about produce fund and trial balance, profit and loss account, and produce balance sheet and journal entries adjustment. So all this is the handout, which is, and my PowerPoint is just a separate. So we learn about asset, we learn about liabilities, we learn about expenses, we learn during our lesson. Do you know the debt click we discussed?
Yeah.
What? So we'll start. So we discuss about double entry bookkeeping, debt, and click. So what D stand for? D stand for debit. We call debit. E stand for expenses. All the expenses will debit in trial balance. A stand for assets, and D stand for drawing. Drawing means something you draw for personal use. Credit. I stand for liabilities. Sorry, L stand for liabilities. I stand for income, and C stand for capital. This is called double entry bookkeeping. Double entry bookkeeping. These are the rules about the debit and credit. Whenever increase, if assets increase, we do debit. If the liability increase, we do credit. Any question?
Um, I can't understand well about that.
Okay. Like we are buying a new machinery. Yes. Machinery is our asset for a business. Asset mean the things which we own it and we use for the business purposes, for the economic activity. That's called our asset. So if I'll buy, let's see, you're going to buy a car. How you can buy a car?
Are you asking about way, the way about how to pay.
Yes, you have to pay. So if you don't have a money, what you will do? Still you can buy a car?
The land loan, borrow the money from bank.
Yes. So loan is a liability. Yes.
Yeah.
Loan is a liability and the car is an asset. So when you're buying a car, you're doing debit your car and the loan is a liability credit. Yes.
Yes.
So one is a debit, one is a credit. Like we are buying car for 500 pound for suppose. Sorry, car is 5,000 pound. Yes. So we bought a car 5,000 pound. So we'll do debit. Car will be debit 5,000 same amount, and we bought from ABC Car Limited. Yes, that's the company to home, but we not make any payment. So we do credit 5,000 as well. Yes. So double entry mean the debit side and it should be equal to the credit side. Does it make sense?
Later, it's okay.
Okay. Let's see. Second scenario can be you have a cash 5,000. Yes. So still you're buying a car. We're doing debit our car. Okay, what are you paying? This time you have a cash, you paying the cash, yes? If you have a money, so you paying cash and the will be credit instead of liability because cash is a asset. When asset increase, we do debit. When decrease, we do credit, yes? So one thing is coming, one thing is going out, yes? So car is we are buying, cash we are paying. If we don't paying the cash, it means we are creating a liability. Yes?
Yeah.
Okay. When you do few question because it takes a while, to learn debit and credit, and you can download the game as well on your mobile. It's called Double Entry Downpour. Okay. Like if you have an Android phone, you can download. If you type Double Entry Bookkeeping, that's the apps, where you can learn about the debit and credit more in details as well. Downpour Double Entry. Okay. So apps, if you download it and you can play the game, and that will help you to understand the concept of double entry. Okay, is it okay, Daniel?
Yes. Yes.
Okay, now LO2 is all about the preparing the account. So first we're looking the entries. So in accounts, we always purpose of accounting system to ensure that all transactions are correctly recorded and can gathered for the period in order to prepare the set of financial statement. So we prepare the set of financial statement. We prepare 4 types of statement which I discussed with you in the previous lessons in level 4. We discuss profit and loss account. We discuss about the balance sheet. We discuss about the cash flow statement, and we discuss about the last statement we call them shareholder statement or equity statement. So these are the 4 financial statements we prepare in account. So when accounting starts, so first thing is a transaction, like bought a car is a transaction, purchases is a transaction, salary is a transaction. So these are all transaction in accounts. We call them transactions. Then we record these transactions. We have a primary documents. Then we have a book of prime entries or the where we can record. Then we have a ledgers. From these ledgers, we prepare our final accounts. So transaction, cash sales. So when we are selling something by cash, cash is coming, cash is a debit, and the sales is a credit. That click, sales is a income, is a credit. Always, every transaction have a two effect, either debit and the credit as well. Yes, both side, debit and credit. Credit sales, it can be, we do the purchase ledger control account, which is mean receivable. Our credit customer, we are selling things, but they are not paying us money. We receive them money from them in future. So these are all transactions. Then we have a prime document like sale invoices, credit note. What is meant by credit note?
Credit note.
Credit note, like you bought something, Danny, and you are giving that thing back to the company. They're not giving you cash back. They are giving you piece of paper. It's called credit note. That's you can use in future to buy anything with the company.
Okay.
That's it's me. You are in credit with the company, and they're giving you piece of paper. It's called credit note. It's sort of your money with other company. Yes, credit note is the income. Okay, remittance advice note, how much is money being paid, checkbook, all these are the prime document. Book of prime entries, these are the books where we keep the record like cash sales, all the cash receipt, sale day book where keep the all the sales record, sale return me how much is the people return the goods back to us, cash receipt book, how much money we receive as a cash payment, how much money we paid. So these are the is called book of prime entries. Okay. So first our discussion is 2.1, prepare the book of original entries, which is mean the trial balance or the prime or the books. So we can discuss these and we don't need to really too much, but that's all about, which I'll go through now things with you. Okay. Okay, so first thing we are going to discuss about is called profit and loss account. Okay, which account first we prepare is called profit and loss account from the trial balance. So before this making, first thing we need to understand about the trial balance. So this is the question, is exercise. So yeah, I'm two handouts. One is a tutor copy, one is a student copy. Okay.
Yeah.
Okay. So if we look land and building, is it expense? Is it asset?
Sorry.
Land and building. Land and building is an asset for a business. Yes, we can use for business activity. We own it. It's called asset.
Yeah.
Anything motor vehicle is an asset for a business. Fixture and fitting is an asset for a business. Office equipment is an asset for a business. Bank is mean cash is an asset for a business. Cash is an asset for a business. Sales is an income for a business. Sale ledger control account we also call, these are our receivables. We sold goods to our credit customer and they not make the payment at the time of the sale, they will make the payment in future, and this is called receivable. We use the technical word sale ledger control account, debtors are trade receivables. Does it make sense? Daniel?
Yes.
Okay, capital means the investment in a business.
Yes.
Sale return means the customer return us goods back. Purchases mean the goods we purchase, raw material. Purchase ledger control account is mean trade payable. Trade payable mean is a liability. From our supplier we purchase good but we not make the payment. So it mean is a liability. Liability goes on the credit side, which we'll see now. Drawing is mean something you draw for personal use, and we use the word drawings. Insurance. Insurance is expense for a business. Advertising is expense for a business, so we do debit. Purchase return. Purchase it debit. Return is mean giving them goods back to the suppliers. Subsistence is mean the subsidized things. Wages and salaries. Wages and salaries expense. Telephone is expense. Discount allowed. We are giving discount if the people are paying money us earlier. So that's the expense for a business. Carried outward is a delivery charge. Delivery charge means the goods we sold it and we paid the delivery charge on it, and technical word we use is called carriage outward. Discount received. We receive discount from our supplier. If we'll make them payment early, so that discount received is the income for a business. Carried inward. Inward means that we pay the delivery charge when we purchase our goods. So carriages inward mean the goods are coming inward within our organization and we paid charges, delivery charges for it. Okay, next. Okay, next we have rates. Rate mean is taxes, council tax rates we are paying, like a water rates. Taxes is called rates, council tax, and we can, that's a debit, that's a expense for a business. Bank charges, is it income or expense?
Charges. What?
Bank charges. Is it income for a business, is expense for a business?
Oh, bank charges. I think internal. Yeah.
Yes, it's an expense for a business. Yes, bank charges, some charges, the expense for a business, and expenses we do debt click, expense, debt, D stand for debit and E stand for expense, and expense will be debit side as well. Motor vehicle is expense and expense goes on the debit side in the trial balance we'll see now. Journal expense is expense. Training is a income or expense?
Training.
Yes.
Is expensive.
Well done. If we are a business, we provide training is expense for a business. Okay. Accountancy fees, if we are paying fees to the accountant, is a expense. Stationery is expense. Okay. Bank interest received. If bank giving us interest, the money we deposit in the bank, what do you think? Is a income or expense?
Sorry, I didn't catch.
Last one.
Yeah.
The bank interest we receive, the money we deposit in a bank, the bank gave us interest on it. Is it income or expense?
Income.
Well done. Great. That's all. That's the way we need to recognize them. Okay. So now we need to make the trial balance. This is the trial balance. So we can write the top the company name and we can write the word debt click. Yes. If I write the word debt click, that will help you straight away. We need to differentiate which one is a, so land and building is a asset and D debt click, D under A is a debit is a asset. Yes. So So, are you getting me? Yes?
Yes. Yes.
And this C for credit side, okay? So DR is a debit and CR is a credit, okay? So mhm, okay. So that debit side click goes on the credit side. So land and building is our asset, it goes on the credit side. Motor vehicle is a debit, it goes on the debit side. Fixture fitting is the debit side. Office equipment debit side. Bank is the debit side. Cash is the debit side. Sales is a income. Income goes on the which side income goes?
Credit.
Credit. Well done. It's a click. I stand for income. It goes on the credit side. Why am I 16 moving around, sir? Sorry, I don't know what's happened with my little computer hang around. Okay. Okay. That's fine. Okay. Then we have a capital. Sale ledger control is an asset which we mean receivable from our credit customer, the money that goes on the debit side. Capital is an investment. C stand for capital goes which side? Credit side. Sale return is the credit side and return will be debit side. Yes, because sales is the income and return is a reduce our income. Purchases is expense and expenses goes which side?
Debt.
And expenses goes on the which side?
Debt.
Debit side. Well done. That's we are putting on the debit side. So purchase ledger control is mean our liabilities and liability goes on the
Credit.
credit side. Drawings goes on the debit side. Insurance is expense
Yes. Yes. Debit.
debit side. Advertising goes
Debit side.
debit side is expense. Purchase return goes on the credit side. Purchase is debit. Purchase return is a credit. Come on. Sorry, my computer, why is doing this? Okay. So then we have a subsistence is mean, yes. We subsidize, we giving discount the people, subsidize goods, yes. Like you working in a company, you have a discount, that is means subsistence, yes. So that's £800 is an expense for a business. Wages and salary is expense. Telephone is expense. Discount allowed is expense. Power, heat, light is expense. Carried outward is expense. Discount received, we received is the income for. Carried inward is the delivery charge expense. Rates is expense. Motor vehicle expenses goes on the debit side. General expense, training expense, accountancy expense, postage expense, stationery expense, and discount received is a income. So when we do all the ledgers are total, yes, when we do the total of trial balance, both sides should be equal.
Why?
Both sides, debit and credit, should be equal. Is it debit and credit equal?
Yeah, yeah.
So that's all about that double entry bookkeeping. So
Okay.
prime entries, all these are the prime entries, and then we preparing from these trial balance. Okay, in assignment we can pick this example, even any example, yes, we can paste it and we can write it. What is meant by trial balance? We can find the definition of trial balance. Yes, the trial balance is a balance all the ledgers in the shape of double entry bookkeeping, debit and credit. From the trial balance, the accountant job start with the accountant prepare the final accounts from it. Okay.
Okay.
Okay. Next, any question, Daniel?
Yes, sir.
Okay. Next, we'll see now is profit and loss account. Okay. Now the from same trial balance, we'll prepare the profit and loss account. Profit and loss account mean either the profit we have or we have a loss. Okay. First thing in the profit and loss come always sales. Or we called revenue, turnovers is the same thing. So first thing is the sales. So we have a sales which is given in the trial balance. If we'll go back in a trial balance, we'll see the sales. Sales is the income which goes on the credit side. That's my sales. Yes. Do I have a sale return?
Yes.
1400. So sales minus sale return is give me the net sale figure. How much is actually I sold? Yes. So sales less my sale return is give me the net sale, which is 202675 in this case. Does it make sense?
Yeah.
Then we less cost of goods sold. Cost of goods sold or sales is a formula there. Opening inventory plus purchases less closing inventory. If we have a carriage inward, we add, yes, less purchase return. So that's the formula which I write it in the slide. Opening inventory plus purchases plus carriage inward less purchase return less closing inventory. So in this question, we don't have a closing inventory, yes. So that's why we just, so they just use the figures. This. So purchases we've been given the figure in a trial balance. Purchase return will do minus from the purchases and we add the carriage inward. The figure come as a cost of sales. Cost of sales mean how much is cost me by the manufacturer or buy and how much I sold. And that profit is called gross profit. So 202675 minus your 136325 and we'll get our gross profit figure. This is not a profit. This is just a gross profit. The things we bought, the things we sell it, how much from. But we have some other expenses for a business, so we need to add them our other income. Any question, Daniel?
Yeah. Yes, sir.
Okay. Discount received is the income for a business. Discount received. It means we have a spare cash we deposit in the bank. We paid money early to the supplier and supplier gave us discount. That's an income for us. for a business, and the income is called other income. We are adding because this is not our normal business. We paid early payment and they gave us discount. They're not giving always, but they gave us this time. Okay, interest received is the income. Bank gave us interest. So other income, we need to add that figure because we're doing profit and loss account. Okay, then we'll minus all other expenses. Okay, insurance is there. Insurance is the income or expense?
Expense.
Advertising?
The same expenses.
Yes, so subsistence expense. Wages and salary?
Expenses. Yeah.
Expenses. Well done. Telephone expenses. Discount allowed. Expense. Power, heat and light expense. Carried outward expense. Rate expense. Bank charges expense. Motor vehicle expense. Journal expense. Training expense. Accountancy expense. Postage expense. Stationery expense. So I had them all. These are all expenses. And minus it from our total gross profit after other income, and we'll get the net profit. So how much is the profit we have?
18,000.
18,710 pound we have a profit. So that's called profit and loss account. So in your assignment, we need to prepare the trial balance. Yes, which we prepare. We need to prepare our profit and loss account like this, and we need to prepare our balance sheet. Okay. Okay, balance sheet is goes all the assets, all the liabilities, and all the capital in the profit in the statement of. We learn about accounting equation. Do you remember we learned accounting equation?
Yeah.
Okay. That's the format about the profit and loss. Yes, what's come? Gross profit is equal to sales minus cost of sales. Then we have a profit for the period, gross profit minus other expenses. So we can find our profit, or we call net profit, is the same thing. Okay, next we're looking the balance sheet. So balance sheet have a assets, different types of assets we discuss about in the one of lesson. We discuss non-current asset, we also call the fixed asset. Asset mean the things we own, the things have a economics value, the things will provide us value, good for the business. We can do with business with these is called our asset. Machinery, furnitures, plant, these are our non-current asset which is we can use many years. Current asset is mean we can use a year like a cash, prepaid, debtors mean the receivable money from our. We sold them good. Inventory is mean the closing stock. Inventory is a stock. Okay, then we have a liability. We have two types of liability. Current liability, which we have to pay within 12 months, like accrual, like we get this, we use gas, electricity, but we not paid the bill on it. So that's called accrual expense. And the creditor is mean our credit supplier to whom we purchase the goods, but we not make the payment. That's called creditors. Then we have a capital. Capital mean investment. If we draw something for personal use, it's called drawing. We minus from our capital the figure. Okay, then we have a non-current liability. Non-current liability mean the liability which we have to pay after a year, not within a year. It can be bank loan 5 years, 3 years. Debenture is sort of the loan which normally company issue debenture to the public and public buy them and pay. So that is called liabilities. Also long-term liability. Bond is sort of bond. So we already watched the movie Jam Bond, yes. And Daniel, yeah, have you watched the movie Jam Bond?
No.
Okay. So bond is an investment bond, yes. Company use it, company borrow the money through using the bond. I have a property, big £1,000,000. I can issue the bond is a security against the property. I need a cash. I can get the cash from the public. Yes. When the bond mature, the people can, if it, let's say it's a 1 million bond, but they gave me 0.8 million cash. So when after 5 years the bond will be mature, so I'll pay 1 million. Does it make sense?
Yeah.
Bond is a sources of finance. Okay. So is the balance sheet can be look like this: non-current asset, which is fixed asset, current asset. Then we have a current liabilities. We minus our current liability from our current asset. We'll get the if we have a non-current liability, we minus 2, and then we'll get the net asset. Net asset is should be equal to our capital figure. Accounting equation I can write again. Accounting equations. We call assets equal to liabilities. Liability goes on the credit side. Plus capital. That's my debit side equal to credit side. So if I'll do assets minus liabilities, this become equal to net asset, and net asset equal to okay. Any question?
Yeah.
No? Daniel, any question?
Yeah.
So next we are preparing the balance sheet. It's first we'll put the current assets. Yes, non-current assets. All these are the non-current asset: land, building, machinery. We can use many years. The cost means the price we bought it. Depreciation in this question we don't have a depreciation. Depreciation means the value of the asset will be need to be reduced. So it is a depreciate. So then is a WDV is called written down a value is called carrying value or the net book value. The net book value we have a same value that we purchase it, and we have a value or asset today date exactly the same because we don't have a depreciation. If we have a depreciation, we'll minus them. Okay, current asset is mean the asset which we have used 1 year. Sale ledger control, within a year we'll receive money from. The money we'll kept it is carry on for using a year. Then cash we kept it for a year, so we plan. Less current liability, the liability which we have to pay within a year, we minus, so it's become a net asset. We this asset 180 plus 37, we'll add them together, it's 217. 210 supposed to be our net asset. According to our accounting equation, net asset equal to capital, yes.
Yeah.
So this figure is my debit side and this is my credit side. So now capital is given in the trial balance. We prepare the trial balance. Less drawing. Drawing means something we use for personal, and add this is become this. Then we have a profit for the year. Profit for the year which is given 18,710, which we already prepared the profit and loss account. If we look at the profit and loss account 18,710, the figure we need to include in capital. Okay, so when I add them all, minus our net asset. If it's not equal, take the difference, find there can be a missing figure. Yes, sometime missing figures can be, and in this way we can find. Okay.
Okay.
Yes, any question, Daniel?
No, sir.
Okay, so these are all the questions, all been solved. Okay.
Yeah.
So we have is about the adjustment. Sometime the year end we have some adjustment. So let's see, this is the question. We have a capital, we have cash, we have a fixed asset, we have a depreciation. So depreciation we need to make adjustment. You see their heading is adjustment, yes?
Yeah.
So that's the year adjustment. So provision is the depreciation, and provision goes on the credit side in the balance sheet. That's called the reserve. Okay. So all this is called extended trial balance in one page, everything. We have a trial balance there, we making adjustment. We are adjusting things, and then we are preparing the profit and loss and the balance sheet. So that's you will see there. If it's a debit and credit, then we need to do minus. If debit, we need to add it. Yes.
Yeah.
Debtors, it goes on. It means receivable stock. We'll see there one debit, one credit. Yes. Debit, credit is supposed to be minus then. Okay. So all these are adjustment. This is called adjustment. We have, if we look at learning outcome, so book of prime entry, cash book, purchase book, all these books, all, and from these books we can prepare our trial balance, which we just prepared today. We construct our final account balance sheet, and we'll go through some point, the cash flow separate. Okay, adjustment, and that's the final account adjustment which we just shown. So if you just copy and paste it underneath, you can write it little bit. That will meet our learning outcome 2.1, 2.2, 2.3, 2.4. Okay. I will next lesson I will demonstrate, because it's quite big element this. So I'll go through the cash flow statement as well with you. Okay. That's all, that's we cover almost everything except the cash flow, which we'll go through. We learned already cash flow. So this is all been explained. What is accounting equation? Yes, like I rewrote it. What is meant by non-current asset, current asset, tangible asset, all these been explained. Any question?
Yeah. Yeah.
Okay. That's all. And I'm not doing quiz. You can play with it. Yes. Okay. Today we learn about how many types of financial statement we have, how we can prepare them, what is meant by the book of prime entries, sale day book, purchase day book, and all these books, is called. And tomorrow lessons I'll go through with you. Calculate the ratios. Yes, so tomorrow we'll calculate the ratios. Before that, I'll go through the cash book elements, and I'll show you further, the book of prime entries again. Okay. So that will help you further understanding. Okay. So then, of course, next week we'll do the framework, and that will help us to 4 learning outcomes. Okay. Any question?
Yes, sir.
Send you this handout, so please go through the question and answers. Yes. Hope so will make sense. If not make sense, write down. I'll go through with you.
Yeah.
Okay. Have a nice week. I think so. Yours is a night now, huh? What time there?
Midnight.
Oh, you're still waking. Sorry.
I It's okay. Okay.
Okay. Okay, my friend, because we have a 4 o'clock here, huh? Yours is 12 o'clock.
Yeah, yeah. Thank
Okay.
you.
Have a good night. Have a sweet dreams.
Thank you. Bye.
Okay. See you then. Thank you. Bye bye.